We're starting to hear the R word again, recession. So, are we in a recession? When are we going to be in a recession? When are we going to be out of the recession? And most importantly, how does a recession affect the real estate market? Those are the things we're going to look at today in the next few minutes. Well, when the Fed met, they said, given their assessment of potential economic effects of the recent banking sector developments, the staff's projection at the time of the March meeting included a mild recession starting later this year with recovery over the subsequent next 2 years. So what is a recession? Well, a recession is a significant decline in economic activity spread across the economy lasting for more than a few months. Normally visible in the real GDP, real income, employment, industrial production, and wholesale retail sales. So, most people could make a case that we're already in a recession, maybe have been. So the most important question is, what does that mean for the housing market? And how is the housing market impacted during times of recession? Well, during traditional recession, the Fed will usually lower the interest rates. This creates an incentive for people to spend money and stimulate the economy. It also typically leads to more affordable mortgage rates, which leads to more opportunity for home buyers. So we've seen the rates go up, and if we do go into a recession, we may see them drop a bit. So let's look at the pros and cons of buying a home during a recession. Well, one pro is there's typically less competition. So it puts people in a difficult financial position, meaning there's going to be a segment that aren't going to be able to purchase a house. So that means less competition, lower prices. Now this one I probably would bet against. So we're going to see how prices have been affected over the last 6 recessions. But based on my previous video, I think we've seen home prices are rebounding, and in the Knoxville area, they have been consistently going up, even as interest rates have risen. Lower rates. Now we just talked about how a recession can impact the rates, because when the economy slows down, the Fed wants to speed it up. And one of the tools they have to do that is to lower rates. The cons are there can be stricter lending requirements. So when the economy goes down, the banks get a little bit more nervous about loaning money, and they rein in those lending requirements. There may be fewer options available. We've already are in a low inventory market. So I can't imagine it being any worse. But in times of financial uncertainty, there may be even few sellers willing to put their home on the market. And then, of course, the economic uncertainty. If you buy a home, just what is going to happen to the economy going forward? So those are the cons. But let's see how recession has affected prices over the last 6 recessions on record. So we can see that there's actually only 2 times where real estate prices actually fell during a recession. It was just a small amount in 1991, and of course we know the Great Recession of 2008 was actually caused by the housing market and the housing bubble and the lending practices at that time. So real estate did take a significant hit during the Great Recession of 2008, although it is way more than rebounded since then. But 4 out of the 6 recessions, home prices actually went up. So how about mortgage rates? Well, all 6 times that we were in recession, mortgage rates fell. And that's likely what we'll see now if we do go into a recession later this year. The Fed will be under pressure to speed up the economy, and they'll use their tool to lower rates, just like they raised them to try to slow down the economy. So it's a little bit of a game that they play. But the one benefit of a potential recession would be that we may see lower interest rates, which is going to obviously increase your buying power, even in an environment where home prices are still going up. So here's an analogy that I'd like to use that I heard recently. This is the angel tree in Charleston, South Carolina. It's thought to be 400 to 500 years old. One of the oldest, it is the oldest oak tree like east of the Mississippi. And what you see in this tree is that it's weathered a lot of storms. It's been around a long time. In fact, the span of the branches are like 25 feet. 25 feet span of the branches. But what you can't see is the root system is twice the length of the branches above the ground. So underground, that root system is spanning 50 feet. And we know that because it's in Charleston, that it's weathered hurricanes, it's weathered lots of storms. Well, this is really what the real estate market is like and has been like over the years. And I think that we have evidence that we are actually in the strongest real estate market in history. Now, why is that? Here's a couple of reasons for that. The first is the current rates on existing mortgages. You can see on this chart that over 80% of people that have a mortgage have a rate of less than 5%, and nearly 60% have a rate of less than 4%. So you see those that are less than 3 and then those between 3 and 4% are the majority of the mortgages out there. That means they have a really low fixed housing payment. And one of the reasons why we're struggling with inventory is because sellers that have those low rates don't want to put their house on the market and trade up to a higher rate. But it also means that they're in a more affordable position to stay in that house. And it means that they're going to do everything they can to keep that rate because they can't go rent for less. And even changing houses would mean likely an increase in their monthly housing budget. So the current rates on existing mortgages has had a lot of strength for homeowners. But this is even more astonishing is that we're sitting on the most equity that people have had in their homes ever of all time. In fact, almost 39%, 38.7% of people that own a home don't even have a mortgage. So they own that free and clear, almost 39%. And then you have about 29%, 28.9% of people that have greater than 50% equity. So their house is worth more than twice what they owe on it. So these people are not going to get into a situation where they're financially struggling because they have equity in their home they can pull from, or even if they're struggling with their house payment and they really need to downsize tremendously, they've got so much equity they can sell, they can live off of that equity. And then you have 32.4% that have between less than 50% equity, but still a tremendous amount of homeowners that have a home today, they have a lot of equity. So this is what brings such strength to the home market. We saw in the last video where prices are already rebounding, and so there's not a precipitous fall in the value of homes happening, nor do we expect to see that because of the fact that we have just so few homes on the market right now and we have a lot of buyers. So I'm Jeff Grebe. I'm broker owner of Weichert Realtors Advantage Plus in Knoxville, Tennessee, with 2 offices and about 65 agents to serve you. We want to be your knowledge broker. We want to give you this important information every week. So please subscribe to our channel, like our page, and comment. I would love to see your comments, and I would love to respond to any questions that you have about the real estate market in the Knoxville, Tennessee, East Tennessee area. And we look forward to serving you. And if we can be of help, don't hesitate to give us a call at 865-474-7100 or find us online at advantagetn.com. Thanks for listening.